Disclaimer: this video is only for educational purposes and not an investment or trading advice by any means. Any stock discussed is purely an academic exercise without any recommendation or commercial interest. Scientific investing as well as presenters may or may not have any investing or trading positions in the stocks discussed. During this video, we don't hold any responsibility for anyone's investing or trading losses. Please do your own due diligence or consult your financial advisor.
Hello friends, welcome to our new video. But before that, if you have not subscribed or pressed the bell icon, do it so that you can stay updated. Now coming to today's video, this is the first video in the series of TechBytes. And before this, in case you have not seen our previous video on why fundamental, technical and quants, please watch that video, because that will give you clarity that why we try to do fundamental analysis, then technical analysis, then quants, and what is the value each of them bring to the table. And that's the quest where I'm trying to put some learnings on fundamental, some learnings on technical, and then on quants. So today what we are going to do, we are going to pick the technical analysis topic and very popular topic called trends, and I will share my top 5 learnings when it comes to trend analysis on charts. So let's go to those 5 key learnings which I want to share with you.
So basically the trend is a general direction in which what we want to measure with respect to time moves. And because we are discussing about stock market and technical analysis, here that movement is related to the price movement and with respect to time. And this price movement could be of any asset class. It could be a stock, it could be a sector, it could be an index, it could be gold, currency, anything. And the time frame, it depends on which time frame we are analyzing. It could be at a daily level time frame, it could be at a weekly level time frame, it could be at an hourly level time frame. But if the general direction of the price movement is on the upper side, upward, then we call it a uptrend. So there are 3 directions of trend. It could be an uptrend, it could be a downtrend, and it could be a sideways trend. So when the general direction is up, we call it an uptrend. If the general direction is down, we call it downtrend. If there is no direction, we call it sideways. A better way to define it is, if you see the price movement creating higher highs and higher lows. So see, the price is moving, it created a high here and then came down. Next time when it is creating another high, this high is higher than this high. And if this goes on, then this high is higher than this high. And when it fell down, this low is lower than this low. So it's a higher highs, higher lows. And if you see the moving average price, that will also be in the upward direction. So this is what is called an upward trend. The downward trend is just reverse. You create lower highs and lower lows. So even if after falling, it's trying to rise, it is not able to cross the previous high. And when it is falling more than the previous lows. So it's lower highs and lower lows. And again, the moving average will be in downward direction. So this is what is downward trend. And a sideways trend is where it's stuck between a range and there is no higher high, there is no lower lows, and it's just range bound. So we call it sideways trend. And if you see category of trend from time frame perspective, we could have major trends, intermediate trends, and near-term trends. A major trend is like the primary long-term behavior, which can last from months to years. And maybe a weekly chart could be a better way to look at the major trend. Intermediate trend is something which is a smaller view, which might last from few weeks to few months. And a near term trend is something which is very, very small, like 3 to 6 weeks. So a stock can be in downward trend on a 3 to 6 week basis, short term basis, but still the long term trend might be intact. And we will see all of this later on in this section and some further section. But from a time frame perspective, you have major, intermediate, and near term. From a direction perspective, you have upward, downward, and sideways. Now, the effort to use various indicators along with price and volume in technical analysis, the whole effort is basically to find the direction of the trend, because the idea is to stay with the trend. And we take position, if we are long on a stock which is going in upward trend, you take your position somewhere until that trend is intact. You are trying to ride the price, and the moment you see the trend changing from upward to sideways or downward, then you may exit. Downward because you lose your profit, and hence you will get a loss. Sideway, because in sideway the price will not appreciate. So even though you are not suffering from loss, there is a time value of money loss because your money is stuck here. There is opportunity cost of that money. So the idea is to identify the trend of the market or asset class using various indicators along with price and volumes, and then to ride the trend, either long it when going upward trend or short it going downward trend, and that is the whole idea. And there is a concept of trend lines, and we will again discuss in detail. But if you can plot a line between the higher highs and the higher lows, this is what is called trend line. This is the trend line which is the higher highs. This is the trend line, the lower lows. Same way you can connect these 2 points and you can plot a trend line here, and the more points you get, the more the trend line becomes stronger. So that is another way to find the direction of trend. Now, why trend is important is because just think about it. This is a plane which is just about to take off. Imagine the power of this plane. It applies lots and lots of power and takes off, which is an upward journey. Anything comes, in between, it has the power to, just throw anything coming out of its way. And just see, like, this roller coaster ride, it's going to fall down with so much of power, so many people behind it. Any insect, any bird, something comes here, it'll just crash it and it'll go. So the idea is, if you see the market and if you see the price and volume behavior in market, there are buyers and there are sellers. Somebody is demanding shares, somebody is supplying shares, and many times both of them are not equally powerful. There is one side which is more powerful than other. Like here, the upward journey is more powerful. Here, the downward journey is more powerful. So the idea is to identify who is on the powerful side. Is it the one who is supplying or is it the one who is demanding? If the one who's demanding is going to be more powerful in the given time frame, upward trend will happen. If the one who is going to supply is more powerful in the given time frame, the downward trend will happen, because there is not enough demand, so prices will fall. And here there is so much of demand that even though somebody is supplying, it doesn't matter, prices will go up. So the whole idea of technical analysis is to make trend as our friend and to go with the flow, to go with the trend and follow the direction of trend. And if the trend is upward, enjoy the long journey. If the trend is downward, either don't do anything, or if you are willing to play into derivatives, we can short it and do all of that. So that is why the concept of trend is important in trading. And just how a trend looks like. So this is a chart of about India Limited, and this is a daily level chart. This chart has been plotted from March 2019 till July 2020. And if you remember, in 2019, about was like one of the most sought after stocks. And this was when the pharma sector was not doing so well. So there was a lot of euphoria around MNC sector, and about was actually doing it. And it is known as more than pharma, it is known as a consumer brand. It is like FMCG pharma. And the stock was doing well. And if you see, this is a clear visible chart where the stock is in clear cut uptrend, because you can see the highs which has created here. And see, though charts may not be perfect, it's not like each and every word which has been told the charts will behave in the same manner. It doesn't happen. And I mean, there is always like, it can happen 70%, it can happen 80%, it can happen 100%, and we need to adjust ourselves. But if you see the data from here, it kept on making higher lows, higher lows, higher lows, higher lows, higher lows, and the highs are higher highs, higher highs, higher highs, higher highs, higher highs. So from this period to this period, the stock has been in clear-cut uptrend. Maybe if somebody saw that, look, it has crossed this higher high here and going, maybe somebody took a position here at, let's say, 9,500 rupees. He could have at least enjoyed till this 12,000 rupees between this time from somewhere September end to December, and then he would have made money. So this is a upward trend chart. And then here, this is also a higher high, but here if you see, it couldn't cross it. It made a low and then it couldn't cross it. So this is the place where the upward trend was broken because it couldn't make a higher high. And we can say the trend is broken, and then it's up to us whether we want to wait, and we'll see how to deal with it, whether to stay or whether to exit, we'll see. But this is like a trend, and somebody could have ridden this journey from here to here. Okay, so this is how a upward trend looks like, and this is a daily time frame chart. Now let us look another daily time frame chart of company called Mayur Uniporters, and again this is a 2019 chart, 1 year chart, and you can see the price was moving up. It went till 400, and then from here, when it fell down and it tried to create another high, it couldn't cross it, and then again it falls down. And then when it goes down, this low is lower than this low. But when it tries to go up, this high couldn't cross the previous high. Now the next low is much lower than this low. And when it tries to go up, it can't cross this high. Here it tries to, break the trend, but again it can't cross and comes back to the same downtrend. So if you see the behavior from here to here, it looks like a clear cut downward trend because you have lower lows and lower highs. So this is how a typical downtrend looks like. And then it comes to a stage where it stops falling further, and it's neither making uptrend, it's neither making a downtrend. If you see, it's stuck in a region, and that region is like, if you draw a box around it, this is the region in which it is stuck without making any higher highs and higher lows. So broadly, directionally, this is how a uptrend and this is how a downtrend looks like. Let me show you a sideways trend very clearly. So this is the chart of CESC. Again, it's a daily chart, and you can see, if you take this as a high, because the stock was making high, 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 then there's a low, there is a high, and then it breaks this low, it tries to go and creates a new high. Now it could be 2 4 rupees up, it doesn't matter. We need to see in terms of, very clear cut signs, and we can see whenever it tries to cross this, it fails, because what happens here is things fall because the suppliers become more powerful than those in demand, and things rise because those seeking the demand becomes more powerful than supplier. But it is stuck in a range where at this range the sellers become more powerful, at this range the buyers become more powerful, and it neither creating highs, it's nor creating lows, it's stuck in this range, which is a sideways trend. Now, for a trader, the uptrend market, the downtrend market, and sideways trend market, there are three different kinds of market where, he needs to react accordingly. Now, let me introduce another concept, the concept of time frame, and why it is important, because we are talking of uptrend, downtrend. It is based on a point of and time of reference. The same company can be in uptrend in one time of reference. The same company can be in downtrend in another time of reference. So just to give a very simple example, if you see this chart, this is the chart of ITC and it's a quarterly chart, which means each candlestick is 1 quarter of data. And if you see this chart, this is monthly chart where each candlestick is 1 month of data. Now let's follow our principles of uptrend and let's try to draw the higher highs and higher lows. So on a quarterly chart basis, this ITC is in an uptrend. And if you join this line with maybe this line, either you can join it here. Again, we'll see whether we should do it from here or we should do it from here. But we are able to join more number of points. So I have drawn the line from here. This is 1, this is 2, this is 3, this is 4. So if we extend this line, we can say till the ITC quarterly share price was above this line, it was in an uptrend. And then when it breaks this line, we can say the uptrend move is over. Now, whether it's a sideway or it's a downtrend, we need to see, but the uptrend is over here. So this is what you see on a quarterly chart, but the uptrend got over somewhere in, let's say, 2019, right? But if you see the weekly chart, See, it has gone into uptrend, then it has gone into a downtrend, then uptrend, then sideways trend. Then from 2009, it's in an uptrend, and on a quarterly also you can see this is where the uptrend started, this is where the uptrend started. But again, on a this is a monthly chart. On a monthly basis, when you try to connect the higher highs and the higher lows, and you build those trend lines, you can see here it's in an uptrend, 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 uptrend. This also you can partially, you might say it's still uptrend, but now you see it's not creating the higher highs anymore. So actually the uptrend is broken, and actually the uptrend is broken and it has gone into sideways, which is basically this one here, if you see. But here, based on the rules on a quarterly basis, still it's within uptrend, but here it has broken that uptrend. So the point I want to make is the same stock in different time frames can be in different trends depending on what kind of time frame data and charts we are looking. But conceptually, if you see, we are applying the same principles of higher highs, higher low and all. So concept wise, it remains the same, but the interpretation varies from different time frames. And as a trader, we have to align our expectations with the kind of time frames we are following. If we are an investor which is very very long term in nature, and we believe in the quarterly chart, and we believe that I will stay in a company which is an uptrend on a quarterly basis, then we shouldn't change our view to, I mean, when we bought, our thesis was to follow quarterly, then let's not change. So thing is, our expectation is to be aligned with what time frame we are following. If you want to change it, we have a rational, we can go, but the expectation has to be aligned with the time frame. And if you know you are having your alignment of return expectation and investment period with quarterly chart, but you are looking at a hourly chart, it doesn't make sense at all, because even in this uptrend, this quarter on an hourly basis, it might have gone into a downtrend because the price has gone down. So what is the, if you act based on hourly chart with expectation from quarterly chart, you will end up doing wrong things. You will not follow any rule, any discipline. So that is why the alignment of expectation and time frame is very, very important. And don't jump from one time frame to another unless you have planned it. If you have the monthly chart and hourly chart both as a part of your plan, because of some rules, some algorithm, some setup, it is okay. And but if you don't have, don't try to jump it. At least try to understand how it works, how it doesn't work, backtest, do all of that. And it's nothing about this time frame is right or that time frame is right. It suits what is right for you. So there is no right or wrong chart, there is no right or wrong time frame. The right is one which suits you, and the wrong in one which doesn't suit you. And what is right for you may be wrong for someone, and vice versa. So we all need to find our own answers, and this nobody's going to teach you. You have to learn these techniques, apply it, and then based on your psyche, based on your behavior, based on your aspirations, you need to find what is good for you, and you need to build your own system. Nobody's, I mean, anybody can teach his system. If you are open to imbibe, it's okay, but you may or may not align with it behaviorally. So it's better to have your own behaviorally defined system. And that is why there is nothing right or wrong. We all need to find what is right or wrong for us. So I have tried to summarize my personal application based learning of trend in these 5 points, which is like the biggest insights I can draw if I look at my trading or my techno funder journey. First and foremost, trend is a friend. We have to ride the trend till it lasts, no emotions attached. I mean, it's good to say I am a long term investor, I will stay with this company. But what is our purpose? Is our purpose to be long term investor, or is our purpose to be make money? And if our purpose is to be a long term investor and we believe in a quarterly trend, a quarterly chart, it's okay, we can stay there, but then we are riding the quarterly chart, we are not thinking about the hourly chart. But if our expectation is I should generate profit over a period, and if I don't generate, then I should get out of stock, then I might look at a daily chart. And daily chart, if the stock goes in downward trend, what is the point in staying with it? Because I know I'm going to lose the money. So the idea is, whether you are a trader or you are an investor, You fix a time frame based on your aspirations, but that time frame defined trend should be your friend and we should follow it, because that will help us in making money and avoiding losses. Second, what I have seen is wealth doesn't get destroyed in uptrend or downtrend if you follow the discipline. If we don't follow the discipline, when the downtrend will come, we will become long term investors that no, I hope one day market will go up and hence I will stay invested, and then you keep losing and you keep losing. But if you follow the discipline, you can ride the uptrend, you can get out in the downtrend. The most frustrating period is the sideways trend, where you keep getting in, out, in, out, in, out without making much money, with paying a lot of brokerage, getting frustrated, and in those frustrations, doing some big mistakes which you would not have done with a stable mind. And I feel this is the sideways trend where which is most frustrating and a trader has to avoid, because finding uptrend and downtrend is easy. Finding a sideways trend and being in a sideways trend and knowing when it's going to beat, and then managing that volatility of sideways trend and managing that get in, get out, and paying that brokerage, I think this is what we have to avoid and we need to learn. And one who can master having taking minimal stress and making minimal losses or generating decent gain in a sideways trend, you can think that you have arrived in your trading journey. Third, trade trend should be looked at various levels. So even if you are analyzing a stock, these stocks operate in a broader market called sector, because the fate of the stock is closely attached to the fate of the sector, and then the sector works within the overall market, and the fate of the sector is attached to the market. It may not be 100% attached, but differ. Like if there's a government regulation which is going to impact the whole sector, it will also impact the stock. If there is a bigger phenomenon which is going to impact the whole country and the market, it is going to impact sector. Some might be more affected, some might be less affected. Same way, a sector policy might affect some company more, some less. But if we look at the trend at these three levels and we find the trends align at all three levels, then it increases our chances of winning. Like if I am analyzing a company in IT sector, and IT sector itself is in a huge tailwind, huge uptrend, it only increases my probability to win for in that company. But let's say IT sector in a huge headwind, and there is one company chart which is looking very good, the probability of making money could be lesser compared to another opportunity in which the sector is also in the good tailwind and the company is also in the good tailwind. So the thing is, we have to think from relative perspective. Relatively, are all of these three things aligned? And it's not like we need to trade in every stock, because every day you will get 2000 opportunities, and those 2000 companies, every minute will be opportunity, every hour will be opportunity. So we have to be very selective, and we have to take bets where the probability of winning is very high, and that is where we should look at trend from these three perspectives. Trend should always be looked with respect to time, and I think seeing the monthly and weekly and quarterly chart, whatever I explained, I think this is pretty clear. Navigating against the trend is risky and caution warranted. And let me show you through the example. So trend is the friend, ride it. And let's say if I have a trend, and let's say I have a rule based on my analysis, that companies which are above this line, blue line or green line, and I will explain what are these blue or green lines, I will keep invested. I will stay invested till the company is above the, let's say, green line. So I might have taken position, let's say here, because I see trend started at 260, and I could have ridden this market from 260 to 440, 430, because the trend is intact. So trend is the friend, ride the trend, and this is ICICI Securities. And look, once the trend has been broken, it has been more than a year. Now we are in, though I am showing you this chart, this is a daily level chart till August, but I can show you even till now, after a year, ICICI Security has not crossed this price once the trend was broken. So there is a time value of money, and there have been stocks which have created massive wealth in last 1 year. And that is where I meant it's good to say I'm a long-term investor, but money is something which is a asset, and you have to churn your asset to make best out of it. So do you want to just stay, let your money do nothing, or do you want to churn your money, at least for a sustainable period of time? It's up to us. It's not uptrend now. Again, see, this is Nifty small cap index, and this is 2014 May, and this is 2016 July. For 2 years, Nifty was stuck in this range. Now, one way is we can get in here and get out here. But the thing is, what if it could have broken and made another high? Then was booking profit wrong? Or we didn't book profit, and what again comes here, 2 years, zero return. So how to deal with it? Because in uptrend, you keep riding, you keep making money. So this is where the frustration happens. And this is where, you lose on the time value of money, because your money is sitting idle and it may not be generating return. So we need to learn to handle this, and so avoid making mistakes in these kind of scenarios. Then trend should be looked at. If you see, I have taken a stock called Tata Elxsi, and you can see the Nifty IT index is also in huge uptrend, and then the index, the overall index, small cap is in huge uptrend, then IT is in uptrend, and then Tata Elxsi is in uptrend, and what you get is like a 900 rupee to 2700 rupee kind of move. And trend should always be looked with respect to time. So this is Mayur uniquarters chart, which we saw earlier on a 1-day basis, and we clearly saw there is a downtrend. But if we see a 15-minute chart of Mayur uniquarters in between this time frame somewhere, which was in March, and this is the March period, and when this has gone up, this looks like an uptrend, because see, there is a there is a higher high, higher high, higher high, higher lows. So even though on a daily basis it's a downtrend, on 15-minute basis it's an uptrend. So it all depends what is our expectation and what is the time frame we are looking for. And it's so obvious when you are trying to ride against the trend. Now there are two inferences of against the trend. Am I against the trend on a daily chart expectation, or am I against the trend on a 15-minute? You can still play on a 15-minute basis and still you can make money here, but you should know when to get out. You can't get in on a basis of 15-minute and get out on a basis of daily level. If you are having aspiration at a 15 level, you should play 15 level. Then this downtrend may not matter. And also you should be aware that on a daily level it is downtrend. So you should be extra cautious if you are trading on a 15-minute basis. The first moment you see that 15-minute chart breaking the uptrend, you should get out, because on a daily level it's already in downtrend. And don't even dare to try to enter into a downtrend, because you expect, how do you know it's going to bottom out here? What is the end of this downtrend? Nobody knows. See, it started falling from 400, went to 211. You could have seen this going up and taken a position here, lost money, taken position, lost money, taken position, lost money. So navigating against a trend is very risky, and caution is warranted, and we should know the time frames. So how to trade and all, we'll see in later sections, but I think these are 5 things which you must keep in mind from trend perspective.
So I hope the video was useful. Now you have fair understanding of what is trend, what are different types of trend, how you should look at trends from different time frames, when you should trade for or against, or why you should not trade against the trend, and all of that. So I will see you in the next video soon, but before that I am happy to let you know that Scientific Investing, we are launching our own website, we are launching our own learning management system, and we are rolling out our membership programs. So all the details are there in the description. There is going to be a lot of exclusive discounts for a limited period of time. There are going to be some prizes to be won. So if you are interested to join the webinar and attend, do go to the description section and fill the form. Thank you. I will see you.